Mr. Kush Bohra, of founder at kushbohra.com. Kush, thank you for joining us here on News9. Always a pleasure speaking with you. And I mean, the bull party is well and truly on for our markets. Another record high today. And if you look at the last few sessions, this buy on dip strategy that is working out beautifully. And considering how the markets has been shifting its base upwards, are you revising your price targets, the short-term targets for Nifty? Because 22,500 is what you had put out last time.
Hi, always a pleasure to be here, and I'm so glad that you remember the number. I think I've chilled it enough more times, just as a target 20 to 500. We will consider an upward revision as and when, we get to that target. My only concern here is that, the large caps are doing well, the Nifty is a for sure buy on dips, and the Gordon markets have been kind enough to sort of, reward that view, that we've held on for a while, also shared with our clients. My only concern now is that the mid caps and the small caps aren't really performing in the manner in which they used to. So perhaps this is the right time to switch whatever allocations you've got in the mid cap and the small cap names to large caps. Does that make a stronger case for a higher Nifty? It for sure does. But will the momentum be the same? I am not too sure. So while the strategy and the view still remains bullish, 20 to 500 is the first level. Basis, how we get there, when we get there, we'll take a call whether that's a zone to book profits, or do we hold on for 23,000 and 23,200 kind of levels also going forward. But as of now, the rally, as you rightly put is that it's a buy on dips. The rally is well and truly in place, and it's so heartening to see that the Bank Nifty is also joined in the party. So as long as the Bank Nifty holds up, I think 20 to 500 is just a striking distance away.
All right, wanted to spend some time on the broader markets, because of course there are some valuation concerns, especially in regards to the mid-cap space, and even the recovery, after each of the shakeout that we have seen, the 3 to 4% shakeout in the past 6 months. There would be a one-day shakeout. The markets would recover, and they would recover immediately, but this time around the recovery has been rather slow. So is there a concern, a relatively strong case for some correction in the mid-cap space?
Yeah, that's exactly what I alluded to in that opening remark, right? Which is you're precisely on point when you say that the recovery has not been as great. Now there are some divergences and some setups that we track when we do technical analysis, and they're just suggesting that the strength in the mid-cap recovery this time around is just not the same as it was the last 12 or perhaps 18 months, when the stocks would see a sharp correction. Everyone would get scared, but then the recovery would come in fast, and it was just a day or two's affair where it just seemed like it never happened. This time around, that's not the case. So that's where a little bit of concern is. But that said, look, markets always have new themes and new flavors coming up, right? Right now, it seems like the large caps are in flavor. And if you see from the broader standpoint, for the last 3-4 years, a lot of these big names haven't really given that kind of money. In fact, one of the most underperforming portfolios would have been the large cap portfolio. So I think a shift towards that is imminent. So mid cap, small cap, select pockets, select sectors will continue to do well. But I think it's a good idea to shift towards large caps and book out some profits in the mid cap and small cap names. Yeah.
All right, and how is the setup looking for Bank Nifty? Because it was the one actually who brought everyone else to the party, had sidestepped for a little bit, but it looks like, at least as of today morning, that's back for round 2.
Yeah, well, I think the volatility is here to stay on Bank Nifty. 48,000 is our target on Bank Nifty as well. There's a day when HDFC Bank performs and the Bank Nifty is up, and then there's a day when it doesn't. So that's all that is playing out. But here too, we have a positional, bias, which is bullish. We are considering long positions on decline. 46,600, 46,800 is the zone that we are looking at. As long as the Bank Nifty maintains this, I think gradually but steadily we should be in an uptrend of sorts. So 46,600 is a good level. 46,600 to 46,800. If the Bank Nifty continues to hold on, be in it, or even if you want to initiate a fresh buy, you still can, for a target of 48,000. So the risk reward ratio here is quite favorable. It's just that it lacks momentum.
All right. One particular stock that is seemingly lacking momentum in the banking space is Yes Bank. It has corrected by about 20% from the recent 52-week high of about 32.85, and a very negative sort of a report has come in from Goldman Sachs this morning. They have cut the price target by about 40%. The price target that they have put out for Yes Bank is 16 rupees. What are you making of this report, and do you think this party or this rally in Yes Bank stock is that over?
Well, right now the stock is suggesting that, we hit a high of what, 32, 32.50, and then we've seen a sharp lump, right? Now, from a technical standpoint, it's taking support at the 20-day moving average, which is a good sign. But I won't rule out further downside because the volumes are waning off. The momentum indicators are suggesting a bit of a downturn. So, from my perspective, it's a good idea to book some profit and stay out for now. I wouldn't recommend a fresh trade. Also, let's not forget, when you're in markets, it's a matter of choice. And right now, from the banking space, from the NBFC space, there's a lot of choice that I have, which is more of a very clean play, does not have this kind of volatility or a hangover, around it. So why would I really go into an Yes Bank? This is more so for those who have an existing position and are looking for an exit. So I think it's a good idea to exit partially, if not fully here, and then place your stop losses close to about 24 and 23.50 kind of zones. If the stock does fall below that, you're best exiting this completely.
Morning, Kush. There's another family that is yearning to get into the party, the bull party that we are talking about, and that is Vedanta and their subsidiary Hindustan Zinc. Both the stocks have been underperforming for the last 1 year and even in the last 5 days. Now Hindustan Zinc has announced that they will likely be going into a bifurcation of two companies. Zinc and lead would be one company and silver would be a separate company. The recycling business will still be a subsidiary. Now, do you think this sort of thing will is likely to change the fortunes of both Hindustan Zinc and the parent company Vedanta, both of whom have been grossly underperforming in the last 1 year?
Most of the times you would say that, an announcement like this would cause an immediate reaction. Very interestingly, that has not been the case. So I'm not sure if market is all too excited about, this announcement. So from a technical standpoint, if I look at it, 320 is a zone where Hindustan Zinc sort of resists and, slips further low. And, on the downside, the number is 305. Now, this has been the range for a while now. I don't see any kind of major, momentum building up. The momentum indicators are also at best, sideways. Volumes haven't also really done, anything great for the stock. So Hindustan Zinc particularly is not something that I would have on my radar. Perhaps if it moves above the resistance zone of 320, we might see some sort of momentum building up. But up until then, that's not a stock that I will, have on my radar for now at least.
Thank you, Kush. So, and what are your picks for the day today for investors?
Let me start with this, with a pick which has not yet hit the target, which is HFCL. The stock has seen a fairly decent run on the back of fairly decent volumes. It is trading a little flattish, but we think that 118 and 121 are very reasonable targets on HFCL. 113, 112 are good support zones, so that should act as your stop loss. The second stock that I had was Geo Financial Services. We've recommended this to our clients also as a part of our advisory service. The second target on Geo Financial was 325. We've broken that, and how? So I don't think that will qualify as a call anymore. However, what I would suggest is if any of your viewers have an existing position in this, don't be in a hurry to book profits. Keep 320 as your trailing stop loss and ride the wave. The stock came very close to 350. It could hit that level again and perhaps move higher from there also. So Geo Financial Services is something that you should hold on to if you've got it in your portfolio already.
All right, those are the top trading ideas from Kush Bohra, sir. Always a pleasure speaking with you. Great insights from you as always. Thank you for being with us here on News 9.
Likewise, and have a great weekend ahead.